This is our Forex blog for December 4th, 2012, and I came up with an idea this week that's one of my better ideas. I've actually had this idea 5 years ago and just started working on implementing it. It's for scalpers and intraday traders that want to see all the key support resistance levels, all of our very high probability statistical likely highs and lows, and one and two standard deviation highs and lows on multiple time frames, all while keeping their main trading chart as uncluttered as possible. So it's very intuitive to look at the chart, but you have all the key levels, and you can see where big clusters of major reversal areas are all clumped together, and those are some of the highest probabilities and best trades that traders could ever take. This is but let me first start with our normal Forex blog. This is our currency meter that shows each individual currency statistically compared against every other one on multiple time frames, from very fast 2 to 5 minute directional indicators that measure whether it's going up or down versus the rest, and also intensity tools. And it also factors in the daily, weekly, monthly statistical trend to give you one easy to read indicator. You can see here today the dollar is extremely weak. The euro is very strong from about 5:30 onward, as is the Australian. And so basically, in a nutshell, let's scroll this back so we can just see them all up until about 12. You're basically looking to buy the euro dollar, you're looking to buy the Australian dollar, and also the New Zealand dollar until about 9. Here's the euro dollar. You can see, first of all, it's above its hourly moving average. Here's the point of control of yesterday. This is where it spent most of its time trading. The average trader has a position, if they still left it open from yesterday, of 1038. So everyone who's long has made money from yesterday. Everyone who, for the most part, is short from yesterday is down. And so it adds more fuel to the upside. This is the upper value area, and this is the previous day's high. The value area shows where 68% of the day's trading activity happened. And when it's above the upper value area, it's very likely to go up. A lot of traders wait for breakouts above the previous day's high. You can see that's already about 18 pips away from the value area high, and it's relatively safe to buy above this area. So knowing that this currency is strong, the real-time trend is up, the daily, weekly, monthly trend is up, you have this breakout right here. You know, these are just some of the trades that you could have taken today. You can see our buy signal right here did a very good job and found a little over 20 pips, as did this one, 20 pips. You know, typically once the market goes up a lot, you're going to want to wait for a little bit deeper pullback, 38 to 50% on the fib level. There's a 38% pullback that didn't really result in much. Here it came down to very close to the 50% level. Our buy signal found another 25 pip profit. So you can see the currency meter had you focusing on this currency that trended up, and have had you avoid you know, a currency that's not quite as strong like the pound. From 7 to 12, both the dollar and the pound are weak. You're not likely to get much good trades out of a currency where both of them are weak at the same time. If you look at this from 7 to 12, you know, it went up, down, sideways, down. It's not as easy to trade as the currency that was strongest. Looking again at this, you can see the Australian is very strong. So you would also want to buy the Australian dollar. Here's this chart. Here's the point of control of yesterday in the upper value area. This is last week's point of control where most traders had positions. Underneath that level, it's more likely to go down, and when it breaks out from here, you know, it's likely to go up. So basically, in a nutshell, when you're stuck between major support resistance like this, you really want to wait for it to break out above here, and then, you know, look for pullbacks. And you can see this one went up about 15 pips, right to the last week's value area high. Anytime any major resistance area is above our upper 2.0 white containment band, it's very likely to be the end of the move. You can see it pull back 10 pips here. We have a sell signal here that pulled back 10 pips. So when you use our tools combined with a little bit of intelligence, Fibonacci analysis, and using support resistance, you're going to have increased odds. Let's go back to this euro dollar, and I want to showcase what I came up with. This is really going to help traders because anytime you're trading, you're going to want to know how far the market moves every hour, every 4 hours, every day. If you add our statistical tools that show you that, for instance, our range projection, if you put the 60-minute statistical likely high and low on there along with a one standard deviation statistical high and low, it will show you how far the market moves every hour. And so if you're long, this is a pretty decent place to get out of the trade. If it's coming up to that level, let's say about right here, this is hourly high, it can go through that level, but most of the time it doesn't. And also the majority of the time it doesn't go above the one standard deviation level. So if you want to do a quick little counter trend scalp, make 5, 6, 8 pips, 10 pips, selling at this one standard deviation level is pretty high probability. Notice this one went up to the hourly statistical high and pulled back, hit the hourly statistical high and pulled back. This next one right here kind of went through it a little bit and went sideways, and then it went up and hit the next one. Just seeing the 60-minute on here, obviously you can imagine how cluttered this chart would look if you put the 60-minute on here along with the 240-minute, which I'll do right now. And I don't have, well actually I do show the daily pivots over here, but if you put all the major support resistance on your chart together, it would become a cluttered mess, as you can see here. So this is my idea. Create a separate window that goes right beside it that shows you what the current price is. I have the 30-minute statistical high and low over here on the right-hand side, the one standard deviation 30-minute high and low right here. You can see the 60-minute statistical high is at 3100. It's not likely over the next hour to go above the 3105 level. I have daily, weekly, monthly pivots on there. You can see the weekly R2. This is the 4-hour statistical high, 3113. And up here is the one standard deviation, 3125. So it's not over the next 4-hour period, or in the current 4-hour bar, it's very unlikely to go above 3125, very unlikely to go below 3165. So if it shut up here and you expected, let's say the euro dollar's been up 4 or 5 days in a row, you don't expect it to continue up, or if it does go up, your goal is to sell the highs because it's likely to pull back. It's up too much. Maybe it's up 400 pips over the last 5 days. Selling it at and above the 4-hour statistical high, you could start to get into a trade at 3113. Let's say you sold one lot here, goes up to 3120 or 21 where there's a monthly pivot level, you sell 2 more lots. It's not likely to go above here, so you can maybe add 3 more lots right here. Your average price would be somewhere up here at 20, and let's say it goes up here, hits your last entry, pulls back to 3110. You made 8 pips on a huge position, you made $400 or $500. And that's the whole point of this. And I discovered this yesterday. I've been trading for a living for the last few weeks, and I got into a trade yesterday in the pound dollar, and I was a little bit early. And I thought, well, I can't have all this stuff on the chart and still be able to trade. It's just too cluttered, as you can see. It just looks horrible. So as you can see, if you remove some of these tools, especially the range projection, the chart is so much cleaner, so much clearer, and you obviously always want to draw your fibs on a chart, so those are extra, more lines on top of it. Nice move up today in the euro. It pulled back. The 50% level is always a high probability place to buy. If you were watching this at that time, you would have known where the 30-minute statistical low is, the hourly statistical low, wherever other pivots are, daily, weekly, and monthly pivots, previous days, weeks, and months high and low. You can see all the clusters of support resistance. And also, if you're looking to buy, this makes a perfect place to draw a line on your chart and then set an alert to notify you if price happens to get down there. So every hour you can look at the charts, make your analysis, and say, all right, I want to buy, but I want to buy at a safe area. Put your alert on here, and once you click OK, it will send you, play an audio file, send you an email, or send you a cell phone message when your level gets hit. And I typically, let's say I wanted to buy at 76, I'll put it 4 or 5 pips away from that level. Oops. And that way, when I get the cell phone message, which usually for me averages about 4 seconds from when the alert gets hit, I get it on my cell phone. If price is falling fast, it can move 4 or 5 pips in the 10 or 15 or 20 seconds it takes to get back and turn my monitors on and analyze the chart and decide what I want to do. So depending on the time of day, you can put it as far as 10 pips away so that I can be back and in front of the computer before it hits my ideal buy or sell level. And this is the first draft of this. There's other support resistance levels I'm going to put in this, and I'm going to try to clean it up a little bit more and make it even more intuitive. This is really for advanced traders that really like to use support resistance. They want to buy at support clusters of support. Let's say the previous day's low is right next to a monthly pivot level. It's near the hourly statistical low, and it happens to be near the 4-hour statistical low. Well, if the longer term trend, which you can see on the main chart, daily, weekly, monthly trends up, it's a very high probability place to get in. And if you get in small enough, you can kind of scale in progressively so that any kind of short 4 or 5 pip move in your direction brings you a break even. And if it goes 10 or 15 pips your way eventually, you know, subtract the 6 pips you're initially underwater, and you're left with 9 pips average profit on the whole thing. And so that is why I created this, and it should really help you. There was just a day break right there, and that's why the daily pivots have shifted over. But you'll be able to see all the key levels of support resistance right on your charts. And it should really help you identify, you know, high probability places. One thing you can also do is show certain levels, let's say pivot levels daily. If I say minus 20 right here for width, it's going to put those over there on the left. So here you can see the current updated levels. This is the pivot for basically today. We just shifted into a new day. 3083, that's below the hourly statistical low, below the 30-minute statistical low. There's a weekly pivot level right there at 3080. The 4-hour statistical low is at 76. So this makes a very safe cluster to buy at, between 83 and really 75. It's a very good place to lightly dip your feet into the water if you want to buy, if it shot down there. And by not looking at the bars, I've found that some traders, and sometimes myself too, if I have too big a position, watching the bar go up and down and seeing evidence of where it was, and it makes me nervous. So by just looking at what the current price is, it's a lot less stressful, I think. You know, time will tell. I just created this today. I'm going to be trading with it heavily this week, and enhancing it, tweaking it, making it even more intuitive, and putting other levels that are very critical to know in here. But it just really lets you see, you know, if the market shot up, 3110 is the 30-minute 1 standard deviation high, so it's not likely to go above 3111 here. There's a weekly R2 pivot level at 3111, and the 4-hour statistical high is at 63. 60-minute statistical 1 standard deviation high, which is also not likely to go over, is right here. So you got a major cluster of resistance up here, and so this is a very, very high probability place. If it happened to go up 17 pips for whatever reason, very high probability place to sell. You know, while keeping your main chart as clean and as clutter-free as absolutely possible.